In the midst of a historic 7-week Bitcoin drop and attempted legislatures to ban the proof-of-work network forming the base of the world's largest cryptocurrency, there have been talks of government plans to quietly impose a de facto Bitcoin ban. Want to know what CoinShares Chief Strategy Officer Meltem Demirors had to say about this? Keep watching the video. Let's begin. First, CoinShares Chief Strategist warns against de facto Bitcoin ban. A concerning statement has been made by $5 billion crypto asset management company CoinShares Chief Strategist Officer Meltem Demirors. According to Demirors, there have been efforts by the government to silently move towards banning Bitcoin by attacking the proof-of-network concept essential to its existence. In her speech made during a panel at the Crypto Bahamas conference, Demirors expressed that politicians globally may have expressed a desire to ban Bitcoin over energy consumption, but that is just a ruse. The reality of the situation is that they're threatened by the asset's decentralized nature. Meltem believes attacking mining to be almost a sure way to tackle the threat posed by Bitcoin, and asserted that a successful ban on the proof-of-work concept will likely to result in the overall collapse of the crypto market. The chief strategist further cautioned that despite the focus on proof-of-stake, the tight regulations could easily shift to the energy-efficient proof-of-stake. In her own words, "What we're seeing around the world, which is really concerning to me, is using the attack on proof-of-work, and in particular, Bitcoin's energy usage, as a way to implement a de facto ban on Bitcoin without saying it. This approach is incredibly short-sighted, as without Bitcoin as a liquidity sink and ultimate source of liquidity, the crypto world as we know it will simply not exist." Next, Demirors' confident ban will not materialize. On the 8th of May 2022, Bitcoin and the general cryptocurrency market suffered a massive price correction, as reported by Finbold, trading below $35,000 for the first time in 10 months. But while the chief strategist warning emerged before Bitcoin's sudden drop to $34,600, she was still confident the ban would not materialize. According to Meltem, the strategist is certain that the attempted ban on Bitcoin will not take hold. Her confidence was explained by citing the crypto asset as having a strong community and decentralization being the right thing to do. Demirors expressed during the panel at the Crypto Bahamas conference that the use of the attack on proof-of-work and in particular Bitcoin's energy usage was a way to implement a de facto ban on Bitcoin without saying so. This is being seen in many places around the world and is really concerning to her. Backing up Meltem during the same panel was co-founder and CEO of Lightning Labs, Elizabeth Stark, who reiterated that the attacks on Bitcoin were due to its decentralized nature. And now, proof-of-work legislations to be enacted by lawmakers. Demirors' warnings come at a time when more and more jurisdictions are working to pass laws likely to ban proof-of-work protocols due to the concerns of high energy consumption. Not too long ago, lawmakers in the New York Assembly passed a bill with the intended effect of imposing a 2-year delay on certain areas in the state affecting proof-of-work crypto mining businesses. The bill further expressed the need for the concerned authorities to conduct a comprehensive study before moving forward, but suffered a setback when the Senate Environmental Conservation Committee reportedly opted not to take up the legislation at its current legislative session's last meeting. Outside of the United States of America, the European Securities and Markets Authority, or ESMA, pushed for a European Union ban on cryptocurrency asset mining backed by proof-of-work. Such a ban was prevented by the EU Parliament voting against banning proof-of-work mechanisms. Up next, Bitcoin's environmental impact not as damaging as reported. The world's biggest cryptocurrency has been slammed for years by its critics for its contribution to the pollution of the planet. Even now, when Bitcoin is finally moving towards mass adoption, concerns over energy consumption hold the asset back. But new data from the University of Cambridge showed a drastic change in the geography of mining over the last 6 months, something expected to seriously improve Bitcoin's carbon footprint. This estimate was backed by the Bitcoin Mining Council's latest report that revealed that compared to the same period 1 year ago, Bitcoin's electricity usage reduced by about 25% during the first quarter of 2022. The reduction in electricity usage came in the wake of China's big crypto crackdown this spring that resulted in half the world's Bitcoin miners becoming offline practically overnight. The net result was fewer people mining, less inefficient gear, and crucially, a massive migration that made miners head to the cheapest sources of energy available on the planet, which are usually the renewable type. Furthermore, there have been calls for Bitcoin to shift to a proof-of-stake protocol like the second-ranked digital currency Ethereum, something bound to radically slash Bitcoin's carbon footprint. The environmental organization Greenpeace even unveiled a lobbying campaign alongside Ripple's co-founder Chris Larsen for this exact purpose, seeking to erase the common misconceptions surrounding the cryptocurrency's energy consumption. Now for some other news. Bitcoin closes in red 7 consecutive weeks for the first time in history. The last 6 weeks had resulted in consecutive lower weekly closes for Bitcoin, but the past 7 days ended up being even more violent when it came to adverse price developments. The low weekly closes for 7 consecutive weeks was something never before seen in the cryptocurrency's history. May 12, 2022 established itself as the worst trading day, with the value of BTC slumping from just over $30,000 to $25,300, its lowest price position since late December 2020. And despite the rather immediate bounce-off and quick recovery of several $1,000s of value, the cryptocurrency's weekly close was still lower than the previous one, resulting in the cryptocurrency's longest red weekly streak yet. The newest weekly candle also started with red, but the crypto market is ever fluctuating, so it's completely possible for the situation to change within the next couple of days. It should also be kept in mind that Bitcoin has a history of reacting well in such times of apparent despair. Just take the COVID-19 drop as an example, during which the index went as low as 8 when BTC fell by more than 50% in a single day. But the cryptocurrency not only managed to successfully recover all of its losses in the following weeks and months, but also shot up to reach new heights, ultimately charting a new ATH by the end of the year. Billionaire Sam Bankman-Fried claims Bitcoin has no future as a payment network. According to cryptocurrency exchange FTX's founder and chief executive Sam Bankman-Fried, the world's biggest cryptocurrency has no future as a payments network. As reported by the Financial Times, the billionaire criticized the digital currency for its inefficiency and high environmental costs, suggesting they switch over to the alternative proof-of-stake network. Proof-of-stake is superior to Bitcoin's current system, as not only does it limit how much participants can mine based on the number of tokens they own, it's also cheaper and less power-hungry, allowing the cryptocurrency to evolve as a payments network. Bitcoin's closest competitor, which houses the second-largest cryptocurrency, Ether, has already made efforts to move to this energy-conservative network, and so should Bitcoin. Bankman-Fried further expressed that he didn't believe Bitcoin had to go as a cryptocurrency and that it may still have a future as an asset, commodity, or store of value, much like gold. Just last week, the cryptocurrency reached its lowest level since December 2020. This dip in value came after the collapse of the so-called stablecoin Terra USD. Crypto-loving El Salvador president invites 44 countries to discuss crypto adoption. 8 months ago, El Salvador became the world's first country to adopt Bitcoin as an official currency. Now, the crypto-loving El Salvador president Nayib Bukele has invited a total of 44 countries to discuss the benefits of crypto adoption. According to a tweet by Bukele, 32 central banks and 12 financial authorities were invited to meet in El Salvador to discuss financial inclusion, digital economy, banking the unbanked, the Bitcoin rollout, and its benefits in El Salvador. The Central American country hosted the representatives from the invited countries, including reps from Africa, Asia, and Latin America, last Monday. A full list of the attendees was shared on Twitter, revealing the presence of the two biggest economies in Africa, the central banks of Egypt and Nigeria. El Salvador's decision to adopt Bitcoin as an official currency was made to reduce the country's reliance on the US dollar and combat hyperinflation. Since then, the country has added Bitcoin to its balance sheet with a total reserve of around 2,301 Bitcoin, worth almost $70 million at the current market rate. And while the recent price crash resulted in a 28% decrease against the dollar, President Bukele bought the dip with his biggest purchase of 500 Bitcoin. The International Monetary Fund, or IMF, has warned other countries against following El Salvador's lead, claiming large risks for financial and market integrity, financial stability, and consumer protection. Despite this, the Central African Republic became the world's second country to adopt Bitcoin as an official currency, alongside the existing CFA franc last month. That's a wrap for this video. What do you think about the government trying to ban Bitcoin? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.